Morning concerning two of the country's biggest banks. The Wall Street Journal is reporting that Citigroup is looking to shed the government's control of the company with a potential multi-billion-dollar stock offering. Now, meanwhile, the judge handling Bank of America's $33 million settlement with the Securities and Exchange Commission over bonuses paid to Merrill Lynch throws out the deal. With more, I'm joined by Elizabeth Rappaport, Wall Street Journal reporter, and wstreet.com founder and Fox Business contributor, Charles Payne. Good morning, guys.
Good morning.
Good morning. All right, Liz, let me start with you. First and foremost, let's start with the judge's ruling on the SEC and Bank of America Merrill Lynch deal. What was the initial deal, and why did this wind up in a court's hands?
Well, the SEC came to a settlement agreement with Bank of America over its charges that the bank had kind of misled investors by not disclosing the bonuses that it paid to Merrill Lynch before the vote on the merger last December. The settlement was for $33 million, but the SEC has to get it approved by a judge. The judge rejected the deal. He said it's not in the interest of the public, that the settlement punishes shareholders who are the victims by making them pay this fine, and in fact, the SEC should be looking at really who are the culprits behind making these decisions, and probably he sort of criticizes the SEC for not going after individuals and executives at the firm.
So what happens now?
What happens now? I mean, the SEC has a number of choices. I mean, they could drop the case. They could pursue the case. The judge set a trial date. He said, this needs to be tried. I'll see you in court February 1. So they could continue to pursue just the bank, or they could adjust the case to pursue some of the individuals, executives that they may think are involved.
Charles Payne, you had something to say about Judge Rakoff this morning.
I love him. This guy's my hero. Did you see what he said? This is a cynical relationship between the parties. In other words, this is what everybody on Main Street kind of feels like. It's a game. Okay, there's a multi-billion-dollar scam and someone pays $33 million. No one's held accountable. We've had this giant implosion. The country on the precipice of falling apart. No one's gone to jail. There's been a couple of indictments. What's going on? And then all of a sudden, this is it when the dust settles. This is justice. This guy is incredible. This is an incredible judge. I love what he's done. I love that he's put the spotlight on this. A cynical relationship. So, you know what? He's saying the SEC, no matter who's in the White House, is nothing more than a pawn in the bigger game where it's all about the big guys getting away with this stuff.
And Judge Rakoff, when you talk about the cynical statement, he says the SEC gets to claim that it is exposing wrongdoing on the part of Bank of America in a high-profile merger. The bank's management gets to claim that they've been coerced into an onerous settlement by overzealous regulators. And what he's saying is this is far from being overzealous as a regulator.
Right. He's saying that there's no answers in this settlement. There's no, revelation of truth in this settlement, and that it's totally unacceptable. I mean, I think he would argue that, and others have said that the SEC does this far too often, punishes shareholders with fines when in fact they're the victims of what may have happened. I mean, this is kind of what some have called kind of a cozy, like you're describing, like a cozy way of getting out of some litigation.
Can't be good news for Mary Shapiro. All right, let's switch gears, Charles, because everybody's talking about Citigroup, talk that perhaps they would look to shed that 34% stake that the government owns, get the government to agree to sell shares in the open marketplace simultaneously. Too soon, too fragile. How do you feel about that?
Well, we're staying on the topic of cynical relationships, that's for sure. Because if they do something like this now, both sides would claim some sort of victory, right? The White House would say, well, we've made money, at least with that last $7.7 billion.
Because the stock's up 36% from the conversion price.
But right now, coming in at the close, Citigroup had a market cap of $51 billion. Our 34% stake is only $17 billion. So certainly we're still down on that $45 billion bailout. The White House's dilemma is if they take this money too soon and late next year there's a double-dip recession and Citi's in trouble again. Obviously, you cannot bail them out again. Certainly, you couldn't do it that soon. So that's their dilemma. By the same token, they would love to be able to continue to put a positive spin on these bailouts just in case they want to do another stimulus plan.
And the thing here, Liz, is they're saying, look, we'd like to get some of this done in the fourth quarter, but let's not forget the role of the FDIC. Sheila Bair has a heavy hand in there right now and wants to see some changes, some visible changes. So might this be too costly a move for the government in terms of their ability to have oversight of the bank?
I think, some might say it's a little early for everybody to be, pulling out of the government help they've been getting. And yeah, Sheila has had a very heavy hand in particular, I think, with Citigroup. So I think, yeah, there could be some tension there.
All right, Elizabeth Rappaport, Charles Payne, thank you guys very much. I appreciate it.
I'll see you tomorrow for cynical report.
Yeah, what is the next cynical relationship?
Segment.
All right.